Okay, so what's going on, ladies and gentlemen, and welcome to level 1 of FXC Academy. I am the provider of FXC Academy, Tymer Thomas, and I'm really excited to just bring you guys this 5-level structured course that I've been working on for the past few months now. And level 1, we are going to be talking about the basics. If you are not already a member of the flock, you can scan this QR code on the bottom left corner to join the flock. And of course, I have to permit you access to the group chat, but if you would like access to that, go ahead and scan that QR code right now. And before I go into the rest of these slides, please do me a big favor and leave me a like on this video. Subscribe if you're new. And without further ado, let's get straight into it. So, table of context, what we're going to talk about today is a little bit about me. I'm going to go about just telling you guys who I am. And then we're going to go over why FXC Academy exists. And then we're going to dive straight into the basics of Forex. So what is Forex? How do I get started? And then abbreviating more on the Forex basics. That's essentially all level 1 is. I know you guys see level 2, but level 2 will be covered on another video. Now, who am I? Once again, I am Tymer Thomas. And I'm a day trader of, oh my gosh, I've been day trading for almost 5 years, and it's going on 6 years now. So I'll say rounding up to 6 years now. I started in January 2020 and currently majoring in finance at Delaware State University. I'm from Wilmington, Delaware. Like it says, day trading for 5 years now with 5 different courses under my belt. So, one of those courses are listed within the pictures you guys see here. That Wall Street Academy y'all see on the far right, that is one of the 5 courses that I took. The picture you guys see with the guy in the top right, that's another course that I took with Druzy Banks. I did a 3-day in-person course in Miami, Florida, where I got a chance to bust up with Drew and also pick his brain as much as I could. Also took, honestly took a lot of courses with the Forever and Profit group. So I'm not sure if any of you guys are familiar with Quillian Black, Druzy Banks, Ryan Gilf, and even Mac Wills. A lot of courses with those guys. So really, really educated in the space. I'm also a community advocate with my work with Network Connect. You guys see that picture in the middle right there. And then more recently, I am a 2025 TD Bank intern. Had an internship with TD Bank over the summer, and it was elite. And yeah, I'm excited. I'm really excited for this. So let's dive into all the good stuff, okay? So why does FXC Academy exist? Well, it's simply to shorten your learning curve into Forex. I've been trading this market for roughly about 6 years now, and when I tell you guys, I've seen it all. I've really seen it all, and my goal with this course is to once again shorten your learning curve into Forex. There's plenty of resources out there, videos, or mentors or gurus and all this, and I know it makes it confusing, and once again, I'm here to simplify your learning curve into Forex. So in order to start your guys' journey into Forex, you have to know what Forex is. And Forex is simply just the market that trades currencies. So when you hear Forex, think of foreign exchange. That is the actual market we're trading. And the Forex market is the largest market of our world. Yes, it is the largest market of our world. And it is a marketplace where people buy and sell the price of currency pairs to make a profit. So, a couple things, the largest market of our world might be a little surprising to you guys, especially to the ones that might be more familiar with the stock market or learning information about this new crypto market, but those two markets combined have nothing on the Forex market. When I tell you guys it's trillions to billions, believe me. Now, talking about the currency pairs, we trade currency pairs in Forex. So a few currency pairs that I've traded in the past: XAU USD, that is gold. I'm currently trading gold to this day. Euro USD, that is the euro compared to the US dollar. And then the GBP JPY, which is the Great British Pound compared to the Japanese yen. Now, if this is your first time seeing these currency pairs, well, this is how you read these currency pairs. So say an example, you're trading the Euro USD. The euro is considered the primary pair in this currency pair. So at any given time that the euro, that currency, is stronger than our USD, then that currency pair's price will go up. So meaning anytime the euro is stronger than the USD, you will see price increasing on that currency pair. But let's just say some point throughout the day the USD is stronger than the primary pair, which in this case is the euro, then that currency pair's price will go down. Now, as a day trader, we are just making moves based on these price fluctuations. We're buying, we're selling based on the strength of these currency pairs. And you could be 3 different types of traders when you're going throughout this buying and selling. To start, you could be a swing trader. And swing traders are people who are long-term investors. They may be in the market or in one position for a few days or even a few weeks. You could choose to be an intraday trader, which is definitely what I am. We are hourly traders, so my sessions are no longer than 4 hours in a day. Or you could be a scalper. Scalpers, they are short-term traders. They're in and out. They're on the lower time frames. Literally probably spends no more than 30 minutes on a chart at a time, honestly. Now, which one is better? I mean, it's all dependent on you and your lifestyle. But for me, I found that intraday works perfect for me. Now, let's talk about why you should want to trade this market. First things first, Forex is open 24 hours, 5 days out of the week, which offers flexibility around your schedule. Mind you, the market opens Sunday at 5 p.m. and closes Friday at 5 p.m. So all throughout that time, you have 24 hours in the day to make a profit or see some profit within these currency pairs in the market that you're trading. A second reason why you should want to trade this market is because Forex has high liquidity, which means that you can enter and exit positions easily. Once again, this market is open 24 hours in a day. And when I tell you guys you could be in and out at the tap of a button, it's that simple. And people love that. And the third reason why you should want to trade this market is because Forex allows you to leverage your trades, which means you can make big gains with little capital. And also, you can start trading Forex with as little as $10. Very cheap, very cheap, very cheap start. Moving on though, let's now talk about how you can get started if you are a person that's interested in actually trading this market and being an active participant. Now these steps here, you might want to pause the video and really read through these steps because this is all about account creation and getting set up. So as you see, step 1 says scan and create an account with liquid brokers. Then you must verify your account with your ID. Now, when you guys scan this QR code, you'll be taken to my broker, or it's not my broker, but it's the broker I use. And I use liquid brokers. They are a US regulated broker. And if you've never heard the term broker before, I want you to look at a broker as the middleman between you and the charts. You deposit money into the broker, and the broker creates your trading account, and it funds your trading account for you to trade those currency pairs. And you want a trustable broker. Like liquid brokers is amazing, guys. Like, oh man, I want you guys to really look them up and do a review on these people because they're outstanding. I have no complaints with Liquid, okay? Okay, but once you do make your account after scanning that QR code and you are verified, you need to be verified before you continue with the rest of these steps. Step 2 says click on accounts, and then click on plus demo account, and then fund your account with between $100 to $1,000. Definitely go a little more towards the upper side because you want to see what this market can do for you, because you'll be surprised, And of course, start off with demo, especially if this is your first time trading. Do not come into this market trying to put in real money right away. Trade demo account, open a demo account, and once you do that, I want you to click on that new demo account, and under passwords, click change, just so that when you are logging on to Liquid Charts, which is in step 4, you know the actual password you're using to log in. Some additional resources you see at the bottom are tradingview.com, which is the chart analysis platform. Tradingview.com is the main platform I use to do my chart breakdowns, to analyze price, to do all my technical analysis stuff. So please go to tradingview.com, create a free account, download it on your phone, whatever. You definitely need that resource. Get familiar with that. Forexfactory.com is for my currency news. So once again, we are trading currencies, and Forex Factory tells me all of the news that is going on for all the different currencies in the world, which is very important. You don't want to trade during high volatile news times, or if you do choose to, you want to at least be aware of what times and what news events going on. So that's why Forex Factory is important. And then also Stenu, which is so great. That is my risk management calculator. I believe it is $3 or $8, somewhere between there a year, to open up an account with these guys, but it's well worth it because it helps you better understand your position sizing as you're going into these markets. And the last part, I know this part is a little long, guys, but this is very important because this is creating your trading account and just getting set up. I want you guys to scan this last QR code here, and this is going to take you to the Liquid Charts platform. This is Pro Liquid Charts. You see that screenshot at the bottom. And to log in, you just use the demo account that we just made from the broker. So your username will be your email, and your password will be the password that you made when you changed the password on that new demo account. Alrighty. Now, with all that being said, you guys should have your demo account ready, and you guys should be ready to learn more about some Forex basics. Let's do it. So this part is literally all the basics, guys. If you guys don't understand all this stuff that I'm showing you right now, you will not understand anything that we talk about throughout the rest of the course. So starting with the Forex terms, when you hear words like uptrend or bullish trend, I'm just saying that price is increasing. When you hear trends like downtrend or bearish, that just means price is decreasing. A pip. Pip is a point difference in the market. So we're trading price, right? And we calculate the price fluctuations by pips, and that's all you'll hear. So, you might hear, I'm risking 20 pips on the market, or I'm looking to make 60 pips in this market. I'm looking to see those type of points in the market. Your lot size is your money multiplier. So when you are about to enter a trade on Liquid Charts, you have the option to change your lot size, and that is your money multiplier. And the best way to figure out how much money you're going to lose or gain in the market is by multiplying your pips by your lot size, and that'll tell you how much capital or cash you are risking or losing on a position. Now, you could try to do this and, waste time, writing out equations on a piece of paper or whatever, but that's why Stenu is so important, and that's why Stenu is great, because instead of like me doing this every time, I could just say, hey, Stenu, I have a $10,000 account balance, and I want to risk 1% or 2% of it, and I want to risk that 1 or 2% within 10 pips. Now tell me what lot size I should use to have that loss that I'm looking to see, or tell me the lot size I should use to better manage my risk. Now, take profit. When you hear take profit, that is a price point that closes in profit. So once again, when you are trading and actually in a position in the market, you can set a take profit. So say if you're in a bullish market and price is increasing and you're thinking, okay, price is going to come to this point, you could type that point into the liquid charts platform, and as soon as price hits that take profit, you'll be out the trade, which is great. Yes, I usually use take profits when I'm on the go, I'm on the road, if I'm not sitting in front of my chart, or even if I am sitting in front of my chart, I might just place it just to help me be disciplined with taking profits. Now, in stop loss, that is the complete, it's the same thing, but just for, when you're in drawdown. So stop losses are really the most important thing. And it closes your position when you reach a certain point in your loss. So say if you were in a trade and you were only wanting to risk 10 pips, you would set your stop loss at 10 pips. And as soon as it hits your stop loss, you'll be out the market. I will reiterate this one time. Well, probably a couple times, but stop losses are the most important thing, guys. But moving on, let's now talk about some candlestick anatomy. And once again, before I move on to this part, please leave me a like, guys. Leave me a like, share the video. This is some elite information y'all are getting. And when I tell y'all I'm trying to make it as simple as possible for y'all, that's what I'm doing. So show me some love. But this says each candlestick has a life, depending on what time frame you are looking at. And each candle has these three things. They have wicks, they have bodies, and they have exhaustion or rejection. A candlestick wick shows you prices that the candle visited but didn't close at. So within this example here, this is a wick at the top, this is a wick at the bottom. In this blue candle here, this is a wick at the top, this is a wick at the bottom. It shows you where price previously was. At one point in time, this full red candle was down here. But the life of the candle closed right here. Say if this was a 1 hour candle. And throughout a whole 1 hour of time, price fluctuated from this high up here to that low. But now we could talk about the body, and that's where the solid prices is. That's the solid price. That's where price opened and closed at. And when price moves bearish, or where you see a bearish candle, price opened high and closed low. That's how price gets pushed down, because price opened high and it closed low. But if a bullish candle forms, then price opened low and closed high. Candlestick anatomy, guys. You gotta understand it. It's the basics. Now, exhaustion and rejection, these just come from the wicks. So when you see multiple wicks in one area, then that's exhaustion and rejection. And this is usually the market's way of telling you that it doesn't want to go in that direction. So I'm not going to pull up the charts now, but say if another candle formed right after this and formed more wicks down here at the bottom, then that would be considered exhaustion or rejection, hinting that price might want to go higher. But we won't spend too much time on that, because now we got to talk about market structure, which is, guys, when I tell you this, when I tell my students this, man, if you don't understand market structure, you can't continue throughout the course, man. Market structure is the basic and the foundational structure that the market makes. So the first type of structure the market makes is an uptrending type of structure, which is consistent of higher highs and higher lows. And that is shown in this example right here with this green line, where price makes higher highs, higher lows at the bottom, higher highs at the top, higher lows at the bottom. And an uptrending market is maintained as long as the higher low point is being respected. But as soon as our higher low points get broken, like this, price printed lower, now price is in a downtrend. It broke structure. Now price is making lower lows and lower highs. lower lows at the bottom, lower highs at the top, lower lows at the bottom, lower highs at the top. And just like an uptrending market, but not really, but kind of vice versa, a downtrending market is maintained by its lower high points. So as soon as this lower high point gets broken, consider market bullish and price will make the higher highs and higher lows. Consolidation is the third type of market structure you will see, and it's essentially when price is moving sideways and it's no telling of who's in control, and it's a headache, you know. And it's really important that you can identify when you're in consolidation so you can save yourself some money, save yourself some time, and just really improve your clarity on what price is doing. That's the most important thing. And I already talked about breaker structure. There's a transition from one trend to another. And that's pretty self-explanatory. And I believe this is one of the last things we'll talk about in this video, which is the market sessions. So once again, we are trading currencies, and these currencies trade the best during certain times throughout the 24 hours you have available to trade. So the first session that starts the market open on Sundays is the Cine session, which opens at 5 p.m. and it really runs longer than 9 p.m. But these are just the most simple times that I've found for these sessions. So I would say Cine session is from 5 p.m. to 9 p.m. And these trade currencies such as the Australian dollar and the New Zealand dollar. So you can trade a currency pair like AUD USD or NZD USD or I don't know. Anything with those two currencies you can trade during that time. Tokyo session trades the Japanese yen from 7 p.m. to 3 a.m. Tokyo session is considered kind of like the build up to the most volatile sessions. So like Cine session is the weakest session. Tokyo session is the second weakest session. London session, which is from 3 a.m. to 11 a.m., trades the GBP and the Euro, and that is the second strongest session. And then, of course, New York session, which we all should know, is from 9 a.m. to 5 p.m., and that trades the USD and the CAD. And, you know, that is the most volatile session. It is very volatile because of news and other factors. But when I tell you guys that London session is really up there with New York session too that I found, so I would say if you were going about trying to figure out your strategy and when you should pick and choose your spots to trade this market, definitely look for the London session or New York session trades. And a little bit of Tokyo session. My general basis would be from 12 a.m. to 12 p.m. is a great time to trade. But this is the conclusion. Well, it's not really a conclusion, but it's really up to you now. You know, I just taught you guys a lot of Forex basic stuff in terms of candlestick anatomy and identifying market structure and different type of sessions and all this good stuff, right? So what I would like for you guys to do now before moving on to level 2 is practice. Practice your market structure. Practice looking at these candlesticks and identifying the wicks and the bodies. Practice placing a trade, literally. Like, go on liquid charts and practice buying and selling. Practice adjusting your lot size and seeing how much money you could make on X amount of pips, you know? You want to get creative, guys. This is level 1, okay? Don't be too tense on yourselves. We're trading demo right now. And just have fun because you guys have a long journey ahead of you in this market. But thank you guys for tuning in. This has been level 1 of Forex Basics. I hope you guys enjoyed. If you did, please leave me a like for the next video. And I will catch you guys in level 2. Peace out, flop.